Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, June 15th, 2022. I'm Frank Ochoa, aka PivotBoss. We currently have a very narrow range heading into the RTH open right now. The ES is trading just 39% of ADR. The NQ is at 33% of average daily range as the market awaits the Fed later on today. We have the Federal Open Market Committee two-day meeting concluding here today with our FOMC statement and rate decision later on today at 1 p.m. Central Time. We're going to get ourselves another FOMC key level very similar to the one that we got May 4th here. That's the FOMC key level right there, 41.86.5 for the ES. You'll notice that Wednesday it rallied. Thursday was a bigger high range day. It sold off. Lower low failure brought us back to the level, and it kind of held there for several days before the recent collapse here over the last several days. So again, that number is going to be very important. The open price right at the 1 o'clock p.m. Central release time, that's going to be our new key level. And again, all eyes on the Fed here today. We have the press conference that follows 30 minutes later. That could provide some volatility. Last time during the press conference, again, we got a big rally, and that was an opportunity to trap and reverse on Thursday and the rest of the time. So again, we're going to get another one of those. All eyes on the Fed. On Friday, pre-market, we're also going to see Fed Chair Powell speak about 45 minutes prior to the RTH open as well. So Fed heavy week here, and today the expectation is for further range-bound action here heading into the number later on today. So again, it's going to be a very choppy back and forth type of day where we likely see back and forth price action here within this range. So right now an inside day as we head into the RTH open, very narrow range. If we take a look here at the NQ, again, you'll notice another range-bound market here. Inside day, 33% of average daily range, 128 points of range right now. It's been averaging about 400 on a 5 and 10 day split. And so right now, inside day, again, all eyes on the Fed as this thing continues to trade near lows here, below the previous month's lows and on the lows of the year. Very clear downtrend has been in place. So again, once we get our new FOMC key level there, we'll have another important level to work from. If we get a rally away from that level, we'll likely see some sort of rejection that brings us back to it. If we sell off away from the level, we'll probably see a rejection that brings us back to it again. So very similar here, taking it offered here and then bouncing back toward it up above. So again, range bound, look to avoid the chop, fade the edges, or sit on hands until the statement and rate decision are released. Taking a look at crude oil. Crude oil had a tremendous rejection in the previous session, a big time rejection off the highs back down, and it was an engulfing day of the prior 5 days. So of the previous week's high, price took out the previous week's high and then ran down and took out the previous week's low. So it was an outside week just in one full day. We did see obviously a range that has developed here over the last week. So we have about a 7, now 8 day developing range that is fairly narrow. Again, we continue to see a very clear uptrending market. The 115, 116 zone still very important. If price were to fail there, we could drop back down as low as 110s, maybe 108. But overall, holding that area could lead to another forceful rally to the upside. Again, still looking for the 125, 126 zone. If you look back here again, getting above the 124s here would open up the upper edge of this range up to 131. So basically, right now, just range bound in this lower edge. If it starts to transition higher here, we could be looking at a move back toward 130 as it trades back in this range a bit. So right now, narrow range, still in an upward flow. Again, bulls still looking to defend the bullish PEMA trigger zone until proven otherwise. A failure at 115 opens up a return back toward 110 to 108. Looking at Bitcoin, Bitcoin right now down about 3.7%, new lows today, and 20,000 or 20,025 is the low here, so right on the 20,000 level. Again, one of the things we've talked about for a while here is the fact that price may need to trade all the way back through the 15,000 level, maybe as low as 12.5. So when we failed to hold 28K, we mentioned that there could be at least a 10,000 point drop into about 18K. We're about 2,000 points off that low right now from hitting 18K. But all of this narrow profile right here likely needs to be traded through. The only time we've traded through that level is during this period of time here when price rallied late in the year in 2020. That triggered a tremendous rally here to begin 2021, and now we're starting to see it finally come back to that zone. So this narrow range right now finally getting traded through, and again the expectation would normally be for price to continue all the way down into the thick of this narrow portion of the range, and then likely bounce back up and trade between say 12.5 and 28K for a while before we see a transition. So we may still see further weakness ahead for Bitcoin. We're not seeing any type of bottoming effect right now, and 15K maybe as low as 12.5 could be ahead for this one. Any pullback could still be seen as a selling opportunity until proven otherwise. Looking at Ether futures, this one's down 7% right now with a low that came in just above 1,000. The low today, 1,010, getting very, very close to triple digits. We talked about this when price was sitting at 1,800, that we could see a 50% haircut of price back to 900 pretty soon. We're about 100 points off that 900 level from the lows of the day. And again, very similar to Bitcoin here, even if we reach 900, it's probably not the bottom here. We're likely continuing downward until we see that 717 previous year's low, and that could be a quick test up ahead given what the Fed may say here later today. So again, once the Fed comes out with the FOMC statement and rate decision, we could be looking at increased volatility later this afternoon, but especially on a Thursday after the Wednesday. Thursday following the FOMC day tends to be a higher range day. That could lead to a significant drop into those downside targets. So again, very similar to Bitcoin. Even if we bounce a bit, it could still be used as a selling opportunity until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.